Who doesn't want to retire from their job and enjoy the good life? Whether that means traveling the world and experiencing all that it has to offer, or taking care of your friends and family and leaving a legacy behind for your kids or maybe even your grandkids. Or even something as simple as the freedom to do what you want, whether that is sitting on the beach or volunteering or working a job or in a business that you absolutely love and you don't do that for the money. So let's tackle something that gets a lot of play here on YouTube, and that is how to retire on Tesla stock by 2030 the easy way, which is only 7 years away. But to be upfront, unfortunately, many of these retire on Tesla videos fall kind of in the hype train category, and they're honestly, some of them in some cases are just laughable and more hopium than actual reality. So I'm going to actually give you the conservative approach to this so you aren't caught making retirement decisions based on some hype train that honestly had no chance to make it in the end of the journey when you actually are set to retire. That's one of the worst things that can happen at the end of your journey whenever you're ready to take that next step in life. All right, so let's get started with some basic assumptions that I'm using so you understand the methodology behind all this. So the first assumption is that I'm only using Tesla stock. Now, you guys know up front that I'm not an advocate of all in on Tesla and all the all-in narratives that are all out there. I just don't believe in putting my financial future all into one company, regardless of how great that company is. But that also doesn't mean that you won't see outsized returns in one stock either that can basically carry you to your retirement. So let me give you a quick example here in my life. If you just invested $3,000 in Apple stock after the tech bubble popped like I did, it's worth more than $1 million today. Now, yes, I own other stocks, and yes, I've bought a lot more Apple many times since then too. But Apple is a stock that allows me to retire anytime that I want without owning anything else. And don't forget to check out the second channel where we talk all about retirement. We also talk about building wealth and entrepreneurship and a lot of other things like that. So for a lot more retirement talk, make sure you check out the pinned comment down there and go subscribe over there. So for the second assumption, we need to have the dollar amount needed to actually retire. I know this is very different for everybody out there, but I chose to go with the $1 million mark. And of course, you may actually need more to retire. But for most people, hitting that $1 million mark kind of is one of those one of those goals that we're all trying to hit. And you can just kind of adjust the number of shares up or down, depending upon you're one of those folks who needs more in retirement, or if you're one of those other folks that are kind of part of the FIRE movement and some other group like that where you can basically live on a lot less. Some people can live on $500,000 for the rest of their lives. Some people are going to need a lot more, kind of depending upon what your habits are and all that. So you can just kind of adjust the numbers accordingly to kind of meet your need. So my next assumption is that Tesla stock will be at $1,700 per share in 2030. You guys know I hate looking out and predicting that far in advance, but we had to do it in order to kind of create this example to go all the way through to kind of get you to a number. So I looked at ARK Invest's latest Tesla projections that kind of modeled all the way out to 2027. Now, those are still basically a guess, but she has been right in the past on her assumptions. So I figured I would take their base case in 2027 and the bear case and kind of divide it right in the middle there, kind of go right there to that middle ground, which is $1,700 per share. And to be even more conservative, I'm going to say that the bear base case, whatever the heck you want to call it, I guess it's the bear base case, actually happens by 2030 in this example instead of 2027 to kind of be even more conservative and add in more of a margin of safety in regards to this number. Now, I already hear you guys right now, Luke, where's your fancy spreadsheet that breaks all this down for us? Well, I wish stock investing existed in a vacuum where you could just plug kind of numbers into a spreadsheet and you get a reliable answer as to where a stock is going long term. But that is not how it actually works in practicality. When Tesla was at $400 per share and everybody was saying it's just the beginning and making all these wild projections using can't miss spreadsheets and all kinds of other things like that, I warned against that kind of thinking and to avoid buying because Tesla was overvalued at the time. And some of these assumptions and some of these other things that were included, even some of the more conservative ones, you just can't bank on things being that consistent over such a long period of time. And that's not even including basically all the other factors that tend to happen every year that influence stocks and the stock market. A spreadsheet cannot tell you we were going to have 9% inflation, nor the Fed hiking rates at the fastest rate in history, or one of the fastest rates in history, nor could it have factored in Elon deciding to buy Twitter for billions upon billions dollars worth of Tesla shares, or Tesla bulls switching to Tesla bears and telling you to sell at the lows, or Tesla getting in a price war this year and lowering their margins or a multitude of other factors that cannot be modeled out that are bound to happen in the future and that have happened in the very recent past. Spreadsheets cannot account for any of that sort of thing, and that's why it's such a tough job to know where stocks are going long term. So that's why I chose to kind of look at this from a different way to kind of get that future number for 2030. There's no need for mental gymnastics or crazy spreadsheets or crazy charts, and graphs are not needed at all. So now the question becomes, how many shares do you need? And more importantly, how much money do I have to put in today to reach that $1 million mark in 2030? So let's put the math to it real quick and see, but stick with me, guys, because I believe there is a reality with all this stuff that nobody is talking about when it comes to Tesla stock and numbers like this. So make sure you hang tight until the end. I promise this will all make sense, because I want to give you multiple options to actually get there and discuss this reality as well and kind of apply it all to the math, so you don't get discouraged by some of the big numbers you're going to see. Don't worry about that. I got you covered too, but we got to get there. Also remember that I'm using what many would actually consider to be a bear case for Tesla. So it's possible Tesla hits this number much sooner than 2030, but I wanted to stay really conservative, so kind of keep that in mind. All right, so the math actually isn't that hard to get us there. You basically need to get the number of shares needed. If Tesla is at $1,700 per share in 2030, you basically just divide $1 million by $1,700, which gives us just over 588. So basically you would need 589 shares of Tesla, because we're having to round up there. I guess you could buy fractionals, but we'll just round up one more. Anyways, you'll basically need 589 shares of Tesla to have $1 million in Tesla stock in your portfolio. So now we move on to the next question, which is, if you wanted to buy all these shares today, right now today, how much would that cost you? Well, since we know we need 589 shares of Tesla, I can just simply multiply the current price of Tesla, which is roughly $270. It's bouncing around right now. We'll see where it ends by the end of the day here. But anyways, roughly $270 times 589 shares, and you would spend $159,000 today to get to that 1 million in 2030. Now, of course, if you already have 300 shares of Tesla, for example, or whatever number you have, you only need 289 more. So that would cost you just over $78,000 today to get the number of shares that needed in order for you to get there. Now, here is the reality with all of this. Coming up with this dollar amount is really hard to do in one fell swoop. I agree completely there, guys. And even over the course of a couple of years, it's really difficult. But that is where I don't subscribe to the kind of linear type of modeling or investing, and I instead do a modified DCA into Tesla stock, and that actually makes these numbers possible. So let's kind of talk about that a little bit more. Back when Tesla was at all-time highs, right around $400 or so, nobody had them going down 75% to just over $100 per share. But strange things happen in the stock market all the time, and that is why the lump sum strategy, to me, doesn't work well over the long run. To me, it's more like lottery investing. I'm just going to throw money at it and hope that it turns into this into the future. So if you lump summed in because Tesla is going to the moon, you lost 75% of your value in Tesla stock, and that is honestly just devastating for anybody, especially somebody that's all in on Tesla. But even if you weren't all in on Tesla, it's still devastating to see that in your portfolio. And even if I hear something like, if Tesla gets to 150, I'm loading the boat, I honestly laugh a lot of times, because by the time we get there, the fear and everything else is so high, I know it's emotionally really hard to commit to doing a huge lump sum that big to buy Tesla stock. Obviously, hindsight's easy to see this, but at the time, spending almost $59,000 on Tesla at the low, which would have given you those 589 shares needed, was almost impossible to do. I mean, not only is it impossible to time the bottom that well, I mean, you could get lucky, but that's more luck. That's almost impossible otherwise. I personally would have jumped when it got under $200, which means I would have been down almost 50% as well if I was forced to make a lump sum jump into the stock. That right there would have been the mark I would have jumped in at. But spending $59K when every analyst and even Tesla bulls, I mean, guys with channels that cover Tesla every single day, all the time, are selling because it's going to 80 and then 60, or in some cases even lower, it is very, very, very difficult to make that call and chunk down that much cash all at one time. And that right there is where a modified DCA comes in to calm your nerves and allows you to buy. And if it goes lower, you increase your DCA amount and you kind of rinse and repeat that strategy as the stock falls. I used this exact strategy last year to put more money into the stock market than I ever have before. And I'm already sitting on some incredible returns using that strategy. I'm not sure I'm going to see those type returns again for a very, very long time, but that's the exact strategy I used to execute this plan. As Tesla went lower, the bigger my buys became, and it seemed like in December and the beginning of January, all I was doing was buying Tesla stock, and so were many of our group members as well. The buy alerts were basically going off daily for Tesla stock, and many folks were able to add shares of Tesla and get their averages way down. Even if they bought high, they were able to get their averages way, way down, or they actually averaged up, but still got shares ridiculously cheap, especially over the long run, especially compared to where it's at today. Remember, averaging up and having 800 shares of Tesla creates more long-term wealth, even though your average isn't as good as the guy with a $400 share at a lower average. So I'm always looking to average up when the price is just ridiculous. And I hear your objections now. If you're one of those people out there saying Tesla's never going to be back under $200 again, I mean, that was just kind of a once in a lifetime type deal. Well, that may actually honestly be true. But I have heard that before in investing over and over and over again, but it doesn't take much to send a stock like Tesla right back down below that level again, even if it runs up to $300 before falling back down to that level again. And here, let me give you guys the proof. Tesla has traded flat overall since January of 2021. So think about that. You are essentially break even for almost 3 years now. It's gone up, it's gone down, but you're still basically break even after 3 years. But that was an incredible opportunity because you didn't need to come up with the money all up front. You had 3 years to consistently invest, and you could use the modified DCA that I did to buy Tesla stock on a massive discount over and over and over again, and ended up needing only a fraction of the money needed initially at its current price to have a great average in Tesla to be able to have those 589 shares. So if originally you needed $159,000 to do this, following a modified DCA where you don't buy when it gets overvalued, which for me during that time frame was $250, and instead you buy under that number, which is $250, and make bigger buys as it falls. And even if you don't add heavier as it falls and started your DCA at $250 and average down all the way to the lows, you have about $175 average or so, which means your capital outlay to get those 589 shares is reduced from $159K all the way down to $103K, and that is $53,000 difference, which is a huge savings. Now, I agree, that's still a huge sum of money, but remember, that was also spread out over almost 3 years. And if you average down more aggressively like I did, that lowers your cost basis even more, well below the 6-figure mark in terms of what you need to put into it. Oh, and by the way, prior to that, you had a 6-year time frame to buy Tesla stock where it essentially traded flat before making its big run up at the end of 2019 into 2020. There have been multiple times where Tesla stock has traded flat or down for years. So to say it's impossible, it could be true, but given its track record and history and everything else, it may not be true, or this time frame that we're in right now may very well extend another year. Nobody knows. That's kind of the beauty and the bad part about investing in stocks. Nobody can see the future. Now remember, I'm using a kind of a bare base case here and stretching it out to 2030. So if we just get the base case, or even the bull case that Kathy Wood put out there, you are retiring even earlier, and you're going to have hundreds of thousands of dollars more to have an even better retirement. So that's how you get there with Tesla stock. Now, we have discussions like this every day on all kinds of stocks in my group, where we have a group of 6, 7, and even 8-figure investors like myself helping you do evaluation, come up with a plan, execute when the fear is at peak levels, and ultimately hit those goals. Additionally, you get to see all my buys in real time, see my watch list complete with price targets. We have 5 courses you can take for free, a stock analyzer tool for free as well that you can use, along with weekly live Q&As where I answer every comment there. Obviously, I answer every question on the Q&As. I answer every comment and every DM in our Discord. I put out 3 to 5 videos a week that are not put out here on YouTube or any other place. They're just for the group members. So check out the first link in the description and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.